Amazon stock earnings preview. What you're looking at right now is the chart of Amazon. Amazon and a host of other tech giants will announce their earnings outcomes at the close of market today, the 30th of July 2020. So you can imagine that Amazon is, we don't need to tell you what Amazon is. So we have this piece written here on SeekingAlpha. We're just going to review two pieces, and just to get a hang of what people are saying. It begins here. This chap here, Michael Wiggins de Oliveira, says the summary of what he wrote here is that the results from Microsoft's Azure adds nuance to how investors should think about AWS going forward. Amazon is the toll bridge for e-commerce activities. Amazon still has a runway ahead, and it's not too late to capitalize on the opportunity here. Amazon's valuation is discussed, and its upside potential is highlighted. Okay, this is his investment thesis. Amazon is an integral part of our lives as consumers. This fact is not going away. I make the argument that during shelter in place, shopping on Amazon becomes increasingly habitual. Further, I contend that AWS, as Amazon Web Services, has less to do with high growth revenue rate at present, but more to do with a steady cash cushion that ultimately provides Amazon with the funds it needs to continue to invest back into its core retail operations. Although Amazon trades for 5 times sales, investors should not expect this great company to go on sale, and that investors attempting to market time their entry are more likely to come out with a loss of omission than anything else. Okay, it's astounding. It's astounding that Amazon's 2020 is shaping up to grow even faster than in 2019. However, as we go through COVID, we can see the pace of digitization in our society taking place. Indeed, there's simply too much undeniable information that Amazon was not likely to slow down anytime soon. What's more, looking ahead, there are reasons to believe that Amazon is unlikely to hit breaks just yet. Okay, we are not going to read everything here. The link, you're going to find it in the description box below. And come back to this chap here, DM Martin's research, Amazon earnings preview, buy and tuck away. And his own summary has it that Amazon will be one of the stars of Super Thursday, which is today. I think that second quarter results will reinforce bullishness in this name. US retail sales have ebbed and flowed in second quarter of 2020, but e-commerce should have performed much better. Some weakness could be observed in cloud, while temporary expenses associated with COVID-19 will likely shoot through the roof. I believe that Amazon is expensive for very good reasons, and I remain firm in my convictions that the stock can still move higher from here. Okay, big tech earnings is about to heat up. Super Thursday, at least 35% of the Nasdaq 100 will report second calendar quarter results, all within of minutes after the closing bell. Other than Apple, a company that I follow closely, will be certainly paying attention to Amazon numbers. In February, I believe that 2020 will be Amazon's comeback year, and I doubled down on my optimism last month. I believe that the second quarter will reinforce bullishness on this name, even if some investors may be justifiably concerned about valuations at current levels. Okay, so we come back to the summary page on Charles Schwab, and you see the market cap of 1.5 trillion, if that helps. And it has a shares available of shares outstanding of 498.8 million shares. Very poor short interest. And these are the headlines coming out already now. US stocks futures drop as data set to show historic second quarter slump. Big tech results move center stage after congressional bruising. Option straddle prices for stock expected to report quarterly results this week. Okay, there's nothing else there to report. To cover then, for the last month, it's actually underperformed all these indexes here, or rather derivatives of the S&P 500. You can see it's just 5.3%, but for 6 months it was the best of all of them, and for 1 year also, yes, the best. What else do you know? Fidelity, MSI. These are the ETFs holding Amazon, Pro Shares, Vanguard, Pro Shares again, and then Fidelity. So it's a bellwether stock, obviously. Okay, put call ratio 0.5 for 1 day and 30 day. And then we will return to the charts. What is also interesting here is that since what would I say now? Okay, I would say since the 7th of July, Amazon has pretty much been moving sideways. So we're talking about more than 2 weeks, more than 3 weeks now. Amazon has been moving sideways. So, and during that time, it hasn't fallen below the 20-day moving average. It has fallen below that. This is the 20-day moving average, and this is the and this other one here up here is the time series forecast. That's the time series forecast up there. That one, that's the time series forecast. So all of them are, the three of them, the 20-day and the time series forecast and the price curve of Amazon, they all almost converged. Let's find out what their figure is. You see, the time series forecast up there is 3,033, and also it's closed at 3,030. You can see what it closed here at 3,033 as well. So yes, they've all converged, and we're even looking at 20-day moving average, not even the 10-day. We can't plot the 10-day on this chart, but on other tools we can. But so far for this past 3 weeks, it has. The only time which fell below this 20-day moving average was probably on the 28th of July. That was the only time it closed below that. Also only one. So out of the last, how would I put it now? When was the last time it ever closed below this trend line? It's a long time ago. So, but and of late it's been it's been consolidating between 3,000 and 3, yeah, but just within the same range, within 3,000. 3,003 has been on that range for 3 weeks now. So people will see this as a very good reason to even buy. They can see that, but they are definitely waiting for the outcomes. Probably that is why we have seen this 3 weeks of sideways movement. So when was the last time they reported their earnings? That would be in April. Yes, So the last time we had that sort of sideways movement also was in April. You can see that. Yes, in April. Look at that. April. That's it. That was the last time we also saw that sort of sideways movement. So a pattern has occurred here. So in April we had it was a range of from 2,400 to, and then it spiked to yes, 2,400. Within that range, 2,000, 2,398 to 2,400 and 2,473. So that this is the pattern now. So that's what people. But and then after that, when the outcomes came out, it continued to move up and up and up and up and up till this time around again. So that's really interesting. So if that is enough for you to make a conclusion, you do. And then what else do we have here again? Was that January? And then that was the last time again. January would have been the last time they announced. You can also see another sideways consolidation as well. So we have three patterns here that has played out within 1 year. We're just we're just in July alone. So and you can see here, because of that sideways movements, momentum definitely dropped. You can see that because of that consolidation, momentum just dropped off, and this is the 13th of July. That was its peak for this year. And it has dropped off now. So anything can happen in the by tomorrow, the 31st of July. So Amazon is a stock to watch at the moment, and it is expected that things will be good. Amazon, remember, it doesn't also rely on its cloud services, which is AWS. It also relies on the main its core business is retail, and of course that our lives now depend on Amazon. Okay, thank you very much for watching this video. Hit that subscribe button. Sign up on our platform, Equity for Keeps, eq4k.com. Support us on PayPal or through Patreon. Okay, thank you very much again, and keep watching and keep subscribing and keep following us. Thank you.